So we have Shay joining us now to talk about the differentiated price of cement and what he thinks about it. Hello, Shay. Good to have you.
Yeah, good afternoon. Thank you for having me.
Yeah, good to have you. So when we look at the scenario, different prices, different brands, how can the consumers be protected and not exploited?
Okay. First things first, we are aware of the structure of the cement manufacturing market in Nigeria. It's neither a monopoly and it isn't a perfect competition either. It's more of an oligopoly with Dangote Cement being the market leader in terms of market share. And companies like BUA and Lafarge also having about 17% and 22% of market share respectively. Now, in terms of this differentiated pricing, there might be a number of factors here. The first one being the fact that a lot of these companies have different geographic spreads. Now, for companies like BUA, they have a lot more market share in places like the Northwest, and Lafarge also has a lot more dominance in the South, but Dangote Cement has a lot more dominance when it comes to the Southwest as well as the rest of the Eastern regions. So that also gives them a lot more latitude to tweak their prices in these regions where they are dominant, where they have significant strength, or where they have a significant amount of distribution strength. Now, another reason for this differentiated pricing could be the perception of quality. Now, we know for certain that Dangote Cement is the brand of choice when it comes to construction and building projects. And this generally is because the company is synonymous with cement manufacturing in Nigeria. And of course, this also gives them a lot more latitude to tweak their prices, to set their prices a lot more than the other two competitors in the industry. In terms of how consumers can be protected, we know that yes, it's not a perfect competition, but it is well competed for. That's the market, the cement manufacturing market in Nigeria. And consequently, we feel that over the long term, the laws of demand and supply will prevail. And this is because the market is efficient in a way. Yes.
So apart from consumers, let's look at investors and let's go to the equities market. Is there any correlation between the earnings and profitability of these cement manufacturers, their strategy and their performance in the stock market?
Okay, yes, we are aware that the cement manufacturing industry did way better than the overall stock index in 2020. And this was particularly surprising in a year that Nigeria as a whole wasn't particularly efficient. We didn't see them as being financially or fiscally capable of implementing implementing the capital budget. And of course, traditionally, we have seen that cement manufacturers do a lot better in years where the Nigerian government is a lot more capable in implementing the budget, the capital budget, and even more so for Lafarge. But it wasn't particularly surprising for Lafarge because they sold off their South African business, which was a drag on profitability. And we believe that they are still reaping benefits of that. But overall, we think that things like liquidity and, of course, the availability of investment vehicles to deploy assets in are a much bigger factors in things like stock prices and performance in the stock market than it is things like strategy, although these things are still important because we don't think investors will deploy their assets into businesses that don't have long-term strategic plans to expand and be profitable. But we still think that things like liquidity and availability of investment vehicles are much bigger factors at play here.
So Nigeria has ratified the Africa Continental Free Trade Agreement, and cement is one of the products where Nigeria, through its cement manufacturing companies, possess a comparative advantage over other African countries. Is Nigeria making use of this advantage?
Okay, yes, we would like to believe we are, because indeed, yes, cement manufacturing is one area where Nigeria possesses comparative advantage over other African countries. And with the ratification of the Africa Continental Free Trade Agreement, we believe that this is a good thing for the cement manufacturing industry in Nigeria. Now, we know that the installed capacity of plants for these cement manufacturers is at least at a minimum about 2 times more than our domestic demand currently. And even though the capacity utilization is just about 50% at the moment, they keep expanding because of things like the pioneer status they get. And this also gives them some pioneer status, yes, for their tax filings, and they also get tax credits. But ultimately, we have seen situations where companies like Dangote try to export, or there were obstructions in terms of moving their products through land borders from one country to another country. And this was due to the obstructions that were in place before the ratification of the Africa Continental Free Trade Agreement. But with it now in place, we expect that over the long term, the Nigerian companies can do significantly better than a lot more of their African competitors.
All right. Thank you so much for sharing your thoughts with us, Shay, and enjoy the rest of your day. Shay Umidiora is analyst with Financial Derivatives Company. Joined us from Victoria Island in Lagos.